Here
If
we
it
are,
doesn't,
folks.
then
We bought at $14. We were the low of the day.
I just got filled.
And we're in control, but the S&P has got to drop. Right here's the S&P. The S&P has got to drop below 170 again, and we want to keep it below the 172.50 handle. And we are at 1510 by 1740. We're out to sell 1740. We paid 14. It doesn't matter.
I came off because
we can
it
always
started
sell
down
1510, but we would never do that. We're going to let and see how this S&P starts acting, because if it starts to break back below the 170 handle and lower, then we're going to throw this out more like at 1880. There we go. We're starting to break below it. So we're live. This is live right now. We're 12:01 p.m. Pacific Standard Time,
There you go.
and we're working that exit out. There it is,
Break it down.
17, 18. Let's go ahead. I'm right there at 170.21. Let's move that ask out at 19.40, $19.40. Because if we can close below it, we might be able to hit that. They closed 15 minutes into the after hours, but once again, we hit that low, didn't we, MMTs? But you got to break below that 170, and it's not doing it. So right now, undercut it and throw it out at 1790. Throw it out to offer at 1790. There it is. The print just showed up. It's live. It's 15. We're 1790. Public's got to pay us. If they don't pay the 1790, then they don't get to own it. They got to pay that 1790 to get to own that. Right now, in the last hourly closing bell, learning how to steal the 1175 917 2011 put entry price. High was $26. Entry was 12.10, $12.10 lower. Now, if we get a reversal below the 179 and stay below the 172.50, below the 170.50, and below 172.50, as the markets are trying to stage, another upside move, but nonetheless, we're still out here to sell at 1790. We'll update you on the exit. Once again, it was all about getting hit at the $14 level, and that was us. That was the close at 23.55. The intraday high was 26.10, and they expire on Friday, so our entry is the low of the day, and we're out to offer. The public will pay. Here we are. We're bouncing up to that 172. We're below the 172.50 handle, but we're going to put that 1730 out to sell. And once again, we paid 14, so our risk is very minimal on the entry. And once again, we're 4 minutes into the last hourly trading bell.
Consolidating there, and if
On
you
this
look at the
S&P?
15 minutes Apple.
Oh, you're talking about Apple. Okay, we're out at
right.
1940 to sell that S&P in that 40. So Apple is what now?
Apple is just stay where it is for the 15 minutes. It's on the same place.
Yeah, it's just consolidating a 160.14 in the bid and ask between market makers and robots and everything else. That's all it's doing again.
Yeah, it goes 1 teeny up or 2 teeny up and 2 teeny down.
Right. Very observant. We're at 1170 on the S&P. Here, look at the Google traders. See how Google gapped down a teeny? It did. It gapped down a damn teeny. In one print. That's a robot.
Yeah.
I'm proud of you.
Thank you.
S&P is working our way. Right now we're at 1170.90 handle. We were below it a minute ago. And if we fall below it, then this value is going to go higher. Once again, MMTs, our transaction's at $14. We did that. Below, based on the S&P going up to 1175 in our formula. Trading the S&P within its upside volatility and at both the other side of the downside volatility is what we incorporate in each and one of our MMTs. And right now, on the flip side, we have a lot of MMTs been doing successfully in Apple. Let's take a look at this reversal. This was a drop down to the teeny line. But from the teeny line to there, it was exactly 91 pennies. And it's sitting right here, meaning that it's going to come back where we bought on this one here. We all know on Google anyways, that when we had this long consolidation, we went through that. Then we got that break up higher again. We got that break higher. We got the calls. They paid good money. And now we had a drop down, and we're right back here. But I can tell you that this next teeny line is going to be the test of that breakout. And should that happen within the next 47 minutes to the closing bell, we're going to look and see where this side of the market, once again, we sold into the strength. And we bought back some. And we're right back here at $8. We sold these at $9. They're in the earlier exit video. Today's trade management. The drop below there and how the diamond lows here, this is going to be the first area, and this is always going to be the second breakout bar is going to be the half bar, and that's going to be 526.85. That's also where the prop in the last breakout right here, the last breakout right here, and right here to this top, okay? And then you can see, you know, where the reversal was, okay? So you can clearly see that the price levels are coming back into play on the name, and that they're $1 higher in that so I'm above 526.85. So what am I above? The higher the ratio above that calculation, that half bar, the stronger that this price will consolidate right here at the teeny line that I have here. And I'm just showing you that it's important to know right here, once again, MMTs, that this is that breakout bar, 526.85. And the higher ratio above it in price, the stronger the move will be. But if it's weak to that number, then of course you're going to get weak in the price like it's doing right now, because it is. And then it's coming back. All of a sudden it's all green again. What is that? Simply a robot. So once again, it's an electronic computing high frequency volume machines that do it within milliseconds up and down in the wick. Okay, not a human transaction, it's a machine transaction that's programmed to do so. The S&P that we bought is 1168, and you're sliding the bid right here. But once again, I'm going to tell people that on Google, that 526.85, we're coming down to it in the bid here. And this is that half breakout bar. You can clearly see it right here. This is it. That's the first one. That's the first support. The second support level is going to be here in this double diamond half bar. And what is that? 526.44. Okay? That's going to be that price action, double diamond price action support bar within the overall teeny contraction consolidation before the breakout started ascending. And that's when we were selling the calls at the high. We're going to put these out now at $20.50. We were out to sell. This is the contract we bought, but we're going to put it out now at 20.40. $1.10 above there. Yeah, we are, because the more we break below the S&P, and the more, if we do continue to go lower, we're still positive. Dow is fighting for positive territory. There's a negative print. This is all live here and now, and it's exactly 44 minutes to the closing bell. And it's day number 2 of monthly options expiration. And we're dropping here in Google. And look at the S&P. The S&P's got to keep breaking lower. And we bought these at $14, and we're out to sell now at a higher price. Once again, the put option on Google, these are going to 810 by 820 on the 530 put within the time frame of the closing bell. Here's a 535 put within the time of the closing bell at 12:17 p.m. Okay, so if you're really interested in making a market, these have got to lose value, and we have to stay above that half bar. We're right there, 526.85. It's struggling with it right here in the bid and ask. I will conclude the closing bell If you break below the half bar, then the put sides have to be bought.